Hi crypto kings and queens, welcome to my channel. My name is Natalie. In today's episode, you can see it's a little bit dark in here, but that is only because I've been back testing. I started to record it because I was like, you know what, why not share this with my YouTube friends? And this is how I've been doing it since 2018. So I've been doing this for so long, and if you are a beginner, if you know someone that needs to look at this video, share this video, because if I was a beginner, I would definitely wanted to look at this video when I started out, because I know it's so many people that are confused when it comes to the charts, and I completely understand that because it's a whole new world, so that is totally fine. Just one suggestion: don't bring pen and paper the first thing that you do. Look at the video for a couple of times and then you start to write down, and then you take it to your own charts. But before we start, don't forget that you can also receive a bonus on Bybits up to $4,050 by using the link in the description down below the video. You also have it somewhere here in the corner. This is how you support me and Bitcoinsensus, so I am always available for you. And Bybit is a super great platform when it comes to especially the fees when we want to hold our positions for a longer time. So claim the bonus. As I told you, you have it down below the video or somewhere here in the corner. Well, I was back testing myself. Just realized another thing that I can do before I enter a trade to see if the trend is broken. That gives me more confidence. Also, if I know the setups for it, in this case, what we see right here should actually, if we follow the trend, would have been a higher low, and then see the market creating the higher high after. But in this case, we saw that the market broke the trend, and we could not have said that we had broken the trend until we actually broke this low, because this was the higher low. So when the trend got broken on the weekly chart, it was actually around, so the trend has been broken now a couple of weeks ago. So around these levels right here, this was where we would if we follow the rules, this is where we look at the charts and see, is it a new lower high or a higher low. So we need to understand, how does it look when the market is starting to create the uptrend. So that's when we zoom in, because the market will show us with market structure that if the market breaks certain levels to the high, we know, and looking at the higher time frames candlestick, depending on the size of the candlestick, we will see the market will start to create that. It will prepare itself to break to the upside. But we also have to understand that it could be a possibility that we actually break the trend also. Because if we look back in time and see these candlesticks, this very volatile candlestick, that for the market to just break to the upside from nowhere after a huge drop like this, the market doesn't have the power to do that. And that is why you usually see the market consolidate before the market creates the push either to the upside or to the downside, because the market needs to slow down and just need to, collect power, whatever that means. It just needs to take a chill before it, huge to either directions, right? So the confirmation we had was these candlesticks. So we're looking at a zone here where you could have seen the market create the break and retest, right? So if we just make the chart more beautiful, this was the higher low we used to see if it was supposed to be another higher low and then create the other higher high. But market closed below it, and then the market tried to break the level again, but it didn't have the power to do that. And so that is why it's important, when the market tried to break a zone, we always have to look at the candlestick size towards it, because the more power you have to a zone, in this case to the downside, This is actually where you need to see the market start to slow down and give you dojis, but maybe consolidate, because that could be because on the lower time frames you will see the market starting to create higher highs and higher lows, and that is the beginning of the uptrend. But now when we're looking at the weekly charts candlestick, it's too volatile. It's too volatile. It's not supposed to look like that if it's a breakout, retest, and continuation. Now we saw the market, if we just connect everything that happened here, was that, look at this drop right here is such a huge drop, such much power. And when we come to the zone, we do consolidate, but we do have two pretty big bearish candlesticks. And also what we understand, when the market gives you a trend line or a wick like this, the market always fill that wick. So we have so many confirmations that the market, this is a zone where the market will break through. And what happens, just like, it doesn't matter what type of time frame you look at, a previous support will be used as a retest for either a new support or a new resistance. But we know that if we break it, this area will probably be retested, because that is just technically like basic of what trading is. A previous support becomes a new resistance, and then you saw the drop. And the thing is also, let's say, this has already happened, and we try to understand, okay, what's going on around here, right? Because we need to focus on the previous price. What happened down here, I can't connect that with this level at the moment. At that point, I need to go back in time to look at prices that is closer to the prices to where we will come, or where we are right now. Because what happened here, okay, we can connect some dots, but we still have to focus more on what's going on around this level, right? But let's say that we were looking at the charts around these candlesticks. Okay, we know that we have the resistance, and this works on every time frame. This is just the higher time frame, so we'll also see how important these levels are, because when we retest higher time frame support and resistance zones, there's so much liquidity, or I don't know, but the market respect the levels so much at these different higher time frames levels. So that is why when you use a weekly chart compared to a 15-minute chart, the 15-minute chart will not respect support or resistance zones in the same way that the higher time frames, because the lower time frames is the one that builds up the higher time frames, right? And the lower time frames need to respect the higher time frame. So either it gets sucked into that level again. The market needs to come to that level. So that is why the lower time frames already know where it's supposed to go, and it will always show you that. And when you look at the charts down here and you start to see the market pull back up, we know that, okay, the market is like a magnet, and the market is magnet to this level because it is such a strong level that we did break one time. So the market needs to come to that level and retest it. Either it breaks to the upside or to the downside. We will know from here the market needs to come to that level to retest for then take a decision. And it is on the lower time frames then you also see what direction is the market actually going to. So when we look at the higher time frames patterns, that was the thing that I wanted to say, that if we look at the market down here, when you use patterns, you also have the evening star, and we're closing below. It's so important to see where the candlesticks closes. Is it above it? Is it below it? Is it in the middle? Because every little detail is telling you exactly what to do. Even if it's easy for me to sit and say here, because I obviously try to practice this and just try to understand what is the basic of it. Why does the market does whatever it's doing? I want to know that. So it's easy for me to say no, But this is the good thing with backtesting, because the more you know about those small details and you backtest it over and over again, you will see the patterns, you will follow the market, you will see exactly what the market does all the time, because it's giving you clues. It always gives you clues. That is why some people are so good at trading and the technical, because they know the clues and they trust them. The same way as me. Sometimes I also think like, hey, I can actually do this, but, and you know, we always learn, but you become more and more confident with your trades, because you are so sure, because you've seen the market done this 5 billion times. So why would it not work this time? You've recognized the patterns, you recognize the behaviors, and that is why it's so important for us to sit at one chart, sit at one pair, and just practice it. Because I was trying to backtest Euro USD today, because I was, you know, I've been backtesting Bitcoin for so long, and US30. For these are like the two pairs that I've always backtested, and I just love the way these two different charts is moving, because they both of them are very volatile, but they move in different ways. Like Bitcoin is in a, for me, the market is moving in such a different way towards what US30 is doing. I can just, with my own feeling, I can separate those two pairs, and I know how US30 moves and Bitcoin. I feel more secure with trading Bitcoin, but Bitcoin has more fake outs. It's like, you know, just looking at the chart, you have one candlestick there and then one there, you know. US30 is not the same way, as I feel. But that is why, you know, when you backtest one pair so much, you get to know the pair, and the market will tell you exactly what to do. And that is why it's so important for you to backtest. And I can be very confident in with what I say, because the more you practice something, you become so good at it. And never stop doing that, because it's all patterns. Take away the money aspects, just don't focus on that. Focus on it as a game, because the technical is not lying. And sometimes, you know, you just saw something wrong, and that is completely fine, but then you try to backtest it again, and then eventually you just understand things will come to you the more you do it. Now when we zoom in from the weekly chart, we look at, okay, so we just zoom in to see what is actually happening. Okay, so this is the best way to use trend lines, because the trend lines is showing the way. And we know now, if the market will create a higher low, if the market will create a higher low and continue and see the market slowly continue to the upside, we broke the support trend line with very volatile candlestick, and we broke below, we closed below the 61.8%. This tells me, you know what, this might not just actually not be the higher low that we will see, and going back up to the higher time frames. Also understanding that with a W formation, with backtesting, we usually see a drop after. So that is why when we come to these levels, we use this, like the power to the downside is so strong, by just try to connect the dots the same way that we try to figure out, okay, is the market coming to these levels to create a higher low? But we also need to have the opposite also. So we take a Fibonacci from the last lower high to the lower low. So at these levels, this is where the market will show you where the lower high can be on the higher time frames. So we zoom in. And it connects more with me when we start to see this volatility to the downside, is that this is actually where the market is creating the lower high instead. And then what happened? We came back up again and retested it as a new lower high. We broke this trend. We didn't respect the higher time frames, higher Fibonacci for the higher low. market showed us kind of all of the signs that this was the lower high, not the higher low. And when we know that, okay, now is the time to sell the market. So the confirmation of the trends just, it just shows you that it is not a uptrend anymore. We are going down. And that is the same way. So for example, if we go to the lower time frames now, just to make sure that it works on every time frame, we have a resistance. Market was going sideways, right? Market was going sideways. So when the market is now breaking to the upside, we need to make, okay, so we can see higher low, higher low, higher low. So if we want to see the continuation now, what we need to do is that we need to take the previous higher low with the higher high. So the market would come back down and retest the previous resistance that we did break, which makes sense. And this could have been the fake out, a retest, and then continuations, because that is usually what the market does when you give the fake out. It pretends that it breaks down, comes back up, retest above the same level that it broke before, and then momentum to the upside, right? But now we see the same thing again. So okay, we do expect the market to come back down to create a higher low, but what does the market do? It's too volatile. It doesn't respect these levels. And then you see the drop. Okay, so we have different higher lows that we can use. Okay, we have the higher low right here. We also have a zone right here. Market too volatile. What does the market do? It comes back up, creates what? The resistance against the previous support. And okay, this does not make sense because it's too big of a candlestick, but these three candlesticks, what does the market represent? An evening star. These three candles, I mean, I wouldn't use it. I mean, of course I can use it, but it looks a little bit funny, having this huge, like, but it is the concept is the same. Okay, so how does it look to the upside? Because we need to know the same. It is the same to the opposite. Okay, so in this case then, if we would have thought, okay, the market will continue down. Okay, we use the trend line, because as long as we are below that trend line, we can create a lower high against it. So we take now, because we want to see the market create the lower high against it, right? So we drag the Fibonacci from the last lower high to the lower low right here. And this is where the market did create a lower high. Market came back down. So market came back up to that level. Market did create another high because it's above this one. So we did create a support right here. And we used the previous support also because this technically, when the market came up to create the lower high, the market needs to break the previous lower low for us to create the next lower low, and then create what? The next lower high against the previous lower low. Can you see? Because that is what the market is doing if the market will continue. But now what happened was that we came back down to the exact same support. We create the same support, and we didn't have the power to break through it. Another thing that we need to have in mind is that this level right here is where the market, as I told you, will create potentially the lower high if we're following the rules of Fibonacci. But we also is retesting a previous lower low. So that is also what happens, right? The market creates a lower high against the previous lower low. But we came back up one time and tried to retest it. And the last time we saw a lower high, you saw the drop. Now you see the market came back up. This is where we expected a drop, but the market created the support. And then you saw the movement to the upside. The market didn't respect it. Remember when I said the W formation didn't work this time? But now this is why it's also so important to understand the higher time frames, because if we go to the weekly, we already know by dragging this Fibonacci from low to high and go back to the daily, we kind of know that the market will reverse from this level. And this is why it's so important for us to use the higher time frames, because everything is connected. When you break down it from the weekly to the daily to the 4 hour to the 1 hour to the 30, 15, and you do that multiple times, you understand how the candlestick is looking in one candlestick on the weekly. You understand what happens on the lower time frames, because they are the one building up the weekly chart. I mean, this is how I at least see it. You don't have to see it the same way, but that is how what I've learned through the years is just looking at the candlestick and why does a candlestick look like this? That is my question. I want to know in detail. But right here on the Fibonacci level, this is how we connect the dots. We understand that from these levels, the market will reverse back up. So it was not a surprise for us that the second touch were the one that the market actually would want to have the push. And you also have this inverted hammer, which is also a reversal pattern from the support. And by understanding that, we came back down to the higher time frames, Fibonacci created the low, and this is where the impulsive move. So what we looked at was only the pullback. And that is why it's so important to understand where are you in the market? Are we in a pullback now? Or are we in an impulsive move? Are we going sideways? So that is how we're just connecting the higher time frames with each other, with the lower time frames. And yeah, but in this case, if we continue with, if we didn't know it by now, because you could have potentially seen the market also reverse back down, but now we had the confirmation that the market actually broke it, and you can see that we didn't even have a retest of this level. The market was just like, bye, gone, and ain't coming back down here for no retest. No, it's too huge, because now the impulsive move has started. The same thing, can you see how huge the beginning of this pullback was? Like, you just had to drop, like, what happened here? And the same thing here, can you see, like, the impulsive move is so much more volatile than the pullback. Can you see? Huge. And then market does, slowing down. And then so in this, when we had the pullback, the impulsive move was to the downside, right? Because there was a downtrend. The uptrend in this case was only the pullback down to the higher time frames, higher low. And then when the higher low was created, you see this huge push to the upside, because this is the impulsive move. The market will create the higher high. Same thing here, it's just to the opposite. And then the pullback, slowly and steady going down, and then you have the huge push. Thank you so much, guys, for looking at this backtesting video together with me. I do hope that you found something valuable. If you did, please share it in the comment section so I know what you've learned. Share this video with your friends and everyone that wants to learn how to backtest. At least this is how I see it, and I think I can help some people, because you can always learn from different ones, right? Don't forget to subscribe to the channel, hit the notification so you know when I do have my daily updates about cryptocurrencies or my live streams. Until then, I wish everyone is having a great weekend. Mwah, from Sweden.